Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. So we had a busy week. The market was all over the place. We tried to maintain our data focus. We introduced a new show with David Ramsden-Wood, the pregame show, really trying to tee up what we're going to talk about throughout the week. The EIA numbers came in with a big draw. We went through what was the driver of that, what do we think is going to happen going forward, and then the economy show covered a lot of ground from the US, GameStop, momentum names, all the way to the most recent skirmish between China and India. So these are things that we continue to talk about, and we actually just put out a article with the hot take of the day, looking at what's happening with GameStop, why this really isn't different, but it in the same way it is different because it's so much bigger, and what are some of the implications behind that. But instead of going through that in more detail, we're going to cover our favorite topic, the primary vision Frac Spread Count. So right now the spread count went from 165 to 170. So we saw an increase of 5 that was pretty much driven across the board with some increases in Anadarko, which isn't too surprising given where some of the numbers are. The Permian and the Eagle Ford, and that's kind of where we're starting to see some of these moves, where we're seeing a bit more activity again in the Permian, but more so in the Bakken. The Bakken is the one that's going to be very interesting. We've seen Hess talk about increasing activity, and this crude quality question starts to come in. So the most recent update with Biden, so we actually talked about on the EIA show how still permits were getting issued. Well, those permits that were issued were actually rescinded because they shouldn't have been issued under the 60-day freeze. So now there's a bit more, there needs to be more clarification as to what is happening and why did this go through. But right now, the long and short of it is the other side of what we talked about still is okay, which is the allotment to the Indian land still remains, which means that you'll still be able to get your water and tie-ins as long as it's on Indian land, and the permits, that we talked about and highlighted just how many are available. So we shouldn't see a huge change or a huge marked shift in the near term. The Anadarko and Appalachia saw a little bit of activity, but when we look at what is going to be the biggest driver to take us back over 185, it's going to be on the back of Texas at this point. And, the Bakken saw some activity that we thought was going to come in February. Instead, it was pulled forward a little bit. But again, it's still nothing that's out of the norm, given where obviously prices and what the trajectory is for where we go into the end of Q1. So here's just looking at the frac spread count over the last 3 months. You can see on how now we have this steady rise, which we think is going to continue as companies start to deploy more capital, get comfortable based on where prices are, where physical prices remain on the spread. When we look at it right at this point, we still have a pretty open market going from the U.S. into Europe. Asia's starting to get a little bit tighter, but we'll talk about that in a minute. But so just based on what we're seeing, we think that the slope is going to stay fairly consistent. And it's not that we can't have a period of time where we're flat or only have 2 or 3 increases. But we think that 5, 7 is going to be a pretty steady mantra as we go through really the rest of not only just January, but also into February. And we start to see some of that spring thaw, guys positioning for what happens once the warm weather starts to come about. And we think that we're going to see some of that activity accelerate. And clearly, it's when we look at 2020, you can see that crazy drop off. But we on a normal level, we typically have a little bit of an increase through January, and then February is where stuff really starts to get going. And we just think that this is going to start a little bit sooner, just given pricing and guys trying to get in front of their decline curves, trying to start deploying that capital. And with fresh capital available, that deployment makes a lot of sense. So then the question is going to be, where is demand? How is demand going to materialize? And that's why when we look at, we've talked about this in the EIA show, this is just kind of a summary of where that is. Total commercial flight departures continued to decline, as we talked about with the lockdowns in China. Now we have some adjustments in Europe. So Italy is starting to actually reduce some of their restrictions. And I think so far it's been in Milan, Rome, and one other location. It might be Venice, but I know that there were 3 cities that were talked about. Where France, they're actually going the opposite direction. They're increasing lockdown measures, and they're saying that if cases continue to increase, they're going to actually get more stringent again. So we keep having this revolving door and this essentially this just merry-go-round of lockdowns, reopenings, getting too aggressive, lockdowns again, and we just continue to go in these circles. The more important one that we've talked about is this peak road congestion level. So you can see China continues on that downward trend, and it's really actually pulling down a lot of the rest of Asia as well, where they're both moving in the downward trajectory. So when we look at Europe, China, Asia, that's something that continues to pull lower. While in North America, we're starting to get a little bit of a movement. Things are normalizing a bit in California. You're starting to see some normalization. So for us, and when we look at North America, as we talked about in the EIA show, we think it's not that it's going to be a huge spike up, but that 8.1 to 8.2 million barrels a day of gasoline demand is likely. And when we look a bit closer, this is what we wanted to talk about on the daily activity indicators, mobility, high frequency data. Even though Italy is starting to reopen some of their components, it's still much slower going, where even though people are now free to do a bit more, it's still restricted to specific locations. And the economy continues to struggle with the political strife that remains. And when we look at the UK, when we look at Canada, US, Germany, everything is pretty much kind of going sideways at this point. And France has seen some uptick. So the commentary that we're seeing right now is going to be a bit concerning as to, not that it's going to fall back down, but we think it's going to normalize and follow the trend that we've seen in Italy, closer to call it the 60 mark, where Germany is going to be the bigger concern, just given their level of impact to the just general European economy. So this is where we see those demand issues coming back and forth, not just from a crude perspective, but also from a refined product perspective. And that wraps up into China. So China's bounced off the bottom a bit. This is something that's going to go down further. It's going to go down further for a lot of reasons. One of them is very much seasonal with the Lunar New Year. The bigger ones that we always like to look at is really China and India, because they're obviously some of the biggest demand centers in Asia. So China is going to come under a particular strain, if you will, which is going to hinder some of that flow of U.S. crude into China, which we've seen from West Africa. Angola was able to finally clear one of their spot cargoes. March sales picked up a little bit, so they're back on normal pace. But February still has about 3 cargoes to go. So the delay there is more concerning, and that could get pushed into March, which will then just cause a bigger issue in terms of March. Nigeria has normalized a touch in terms of selling. And when we look at where the cargo is going, China has picked up. Now they're at about 112 VLCCs going into the country, which is elevated for this time of year. And then the U.S. has seen an uptick in crude cargoes coming into the Gulf of Mexico and PADD 5. So we're starting to see some movements, and which means that the U.S. is going to start importing more. That's going to offset some of the drop in imports that we saw. Exports will be under pressure going into Asia. We've seen a few pickups of West African. Just general demand is slowing in that region, which is going to push back. And then the question is, where are we going to see that difference, and is it going to be able to go into Europe? And we'll see some, but it'll be tough to see a big increase. And then when we look at some of the other data points, you can see, again, it's just kind of just going sideways. And this is why we remain concerned on what does Q1 look like. The Q4 numbers for GDP coming out of the U.S., which we'll talk about in more detail in the economy show, came in a little bit below expectations. Not a huge miss, kind of within that ballpark or margin of error. We just think that there's going to be a bit more pain, especially when we start looking at labor market, wages, the inflation coming in. And then, just to kind of round out, just because it's a topic du jour, but when we look at GameStop, momentum names right now with a huge amount of short interest, there's a lot of components at work, where you have to look at settlement dates, where are settlement dates, where is leverage, where are loans, and there's so many things to unpack. So, we wrote the article. It's about 1,500 words. I think we did a good job of trying to consolidate what is happening right now. So happy to send it, or we can send the link, then which you can find the article. And if you have any questions on it, please, we'd like to hear from you. I also posted it as a thread for the key points on Twitter, so you can find it there as well. But there's definitely a lot at work. And the reason why we're talking about that so much is because it's really going to drive where is momentum right now. How are people positioned? What does that mean for some of the pricing on not so much a physical side, but really on the stock market? And could we see some shocks to different directions as leverage is moved around? So a lot of things to come. Clearly we're moving in one clear path, which is activities picking up, which is obviously a good thing to see for those that need jobs, want to keep their jobs, and just starting to get a little bit more momentum into February. So if you have any questions, concerns, anything that you think we should talk about, want to hear more about, please let us know in the comment section. So have a great weekend. Stay tuned for our pregame show that's going to come out every Tuesday, which is going to be that nice addition to kind of tee up what we're going to talk about going forward. So again, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.